We are now going into CMCO, right? And hopefully we don't go into a total lockdown. So everyone basically has a role to play. Just keep the SOPs, right? And but what happens if we do really go into a total lockdown, the MCO, right? Are we as investors prepared for this lockdown? And in fact, most of us will probably be working from home right now, and this will probably can be an opportunity again to look at investing or the investment market, right, or the stock market. So this will be a topic for discussion today. We have Alvin here with me and Peter, of course, join us in this conversation. So if you have any questions, you can type in on the comment section so that we can try to answer those questions.
Apparently, right? We are too soft. Apparently, our mic's too soft.
Okay, Peter, maybe you can say something.
Is it okay?
It's all good.
It's all good.
Yeah.
Okay, so our team has asked you guys to increase your volume a little bit.
Generally, myself and Alvin are more gentle in nature. We tend to talk softer.
Yeah, my voice is too loud. The mic also can. Okay. So anyways, guys, so this is the topic for discussion for today, right? So if you have any questions at all, how you can prepare yourself, and if you do not know what to do, then ask us those questions, all right? But of course, I'm going to start the conversation first. Being as an investor right now, if we are going to a total lockdown again, I think the first question that everybody will be wondering is, what do you think will happen to the stock market?
What do you think? Okay, so if I had a crystal ball, the question is, what is the crystal ball telling me, right? I guess the question is, are we going to go in a complete lockdown? I mean, are we going to see a 50% drop in prices? I think this time it may be quite unlikely. It might be quite unlikely because right now it's actually we're not, we don't have that kind of that steep, when things are uncertain and it kind of happens very quickly, right? Then we see very sharp drops in market typically, right? So the MCO was completely taken aback, right? Everyone was kind of blurred, they're not sure what to do. But I think, we don't kind of see that mad rush to the supermarket, except I think some of you guys last night did some mad rushes to supermarket, but I think that reaction now is a bit more cushioned than when it happened the first time. Yeah.
What about you, Peter? What do you think?
My take is a bit different. If you look at it, what is so different this time is, look at it in March and April period, you're talking about 1/3 of the whole is under lockdown. In this case, what we're experiencing now, we are not only talking about it's only Malaysia, but to a certain extent, it's only 3 states, mainly Sabah, KL, and Selangor. So it is definitely not as severe as the last lockdown that we see, right, where it's involving the whole world. Second thing is economic activities are still allowed to be continue. So again, we don't see the implication be that bad. But if you to take the question further, if you don't expect it to lock down or the share market to drop, do you expect the share market to rally as what you've seen in March?
Yeah, so that's the next question, right? Now that most of us will go back at home again, and because I think during the lockdown is everyone at home, nothing much to do. Maybe they look at the stock market, right? I've got friends who have never invested before, starting investing. I mean, glove counters are the top of the day, right? So everybody's investing with glove counters. But so yeah, the question will be whether we will get the same scenario of what we've seen in April, in May.
Honestly, I don't think so. Simply because this time around, there's no moratorium. I mean, it will come from April and May. We worked out the maths before in our session. We mentioned many times, if you look at during the lockdown period, the moratorium is equivalent to plus minus 15 billion a month, right? And that is, if you assume a certain percentage, say 10% invested in the stock market and the trading of it. So the impact of the moratorium is quite big. So going forward now, starting from this month onwards, there's really no moratorium benefit from there. So see, during those periods, honestly, it's very easy to make money simply because the liquidity is there. So we always say that when it's flooded, all shit will float. Right? Now it's back to reality. Now the flood has gone down. As I think we had a conversation with Alvin before, it said only selected shit will actually float. Not all shit will float.
Warren Buffett said that only when the tide goes out, then you know who's been swimming naked.
Yeah.
Right. So now, I mean, if we talk about the tide, right? If we look at the moratorium impact, I mean, straight away we can see, at the peak, almost 50% of market volume on Bursa Malaysia was actually retail. Very much retail driven. And if you kind of look at it pre-COVID or last year's kind of market, on average, you look at about 20%. Now, you got to factor in the fact that this is on value, and values have gone up quite significantly, right, during that period as well. So in terms of value itself versus last year's value, easily 4 or 5 times, right? And one of the, when you have kind of moratorium, we freed up 100 billion in 6 months, right? So kind of everyone started putting money into the stock market, and it's quite evident, right? But this month, I guess everyone's kind of started to tighten their belts and really try and figure out, let me kind of pay off my bank and my debt and everything else, Maybe for the retailers, investment is now a little bit secondary, right? In the mind of the retailers. Yeah.
Yeah, I mean, you have been following us in our Copy Time sessions. We've done market update every week, right? And if you look at the past few months, I mean, in like May, June, July, you can see that the retail market were dominating the market actually, right?
Yeah.
We see the volume was quite high. I mean, we have reached like 20 billion. I think one of the highest in history.
Yeah.
But right now, you see the volume has toned down to about 5 to 6 billion on a daily average, right? And we also see that the market participants, we see now that more actually institutions are starting to become net buyers. I'm talking about local institutions.
Local institutions, right? Yeah.
Institutions, they are starting to buy. So, so despite all this being said, although yes, that rally that we see in March until today,
not coming back.
Probably not going to see it again. But where do you see the market? I mean, do you think that there are still opportunities?
I think to be honest, right, as an investor, actually I prefer this kind of period. Honestly, because if you look at it in the last few months, right, you don't need any skill to make money in the stock market. You just throw a dart, you just put a chart, anything floats, right? But going forward, when you don't have all this liquidity going forward, that is where you really need to be able to really select companies that really have good fundamentals and that can deliver real earnings growth. Then only the share price will reflect based on it. So going forward, if you ask me, there's still opportunities. Actually, there's still a lot of opportunities out there. But just that the main difference now is, as an investor, you have to put in more effort. You really need to know your stuff now. It won't be as an easy money as 6 months for the last 6 months.
Yeah, I think the easy money period is kind of past. Yeah. Now it's the moderately difficult money that's going to come in. Moderately meaning that you actually need to put in effort, right? I think, last few months are crazy, right? Most stocks easily, I think if you close your eye, you easily could have doubled your money, right?
Yes.
But of course, I think getting the exact same thing again, I think it's going to be quite tough. Yeah.
But that's not, I mean, yeah, but, among the friends I have, even some, the majority in the market, because most of them actually came in like in July and August, that's where the volume really went up quite significantly, right?
Yeah.
And most of them are being caught buying at high prices because we do see prices starting to taper off, starting to come down in the past 1 month. So do you think that there are opportunities, like what Peter said, there may be opportunities, right? Selective. Beep, beep. So the question is, how do we prepare for? How do we, capitalize on this kind of period?
I think when we had one of these sessions early on, I think it was like a Sunday session where we talked about it. I said one of the things that we're seeing in the last few months were a lot of new investors, right? The kind of activity of new investors or the flurry of opening of new accounts, which is quite evident, right? If you talk to most brokers, their backlog just to process new applicants to open new accounts was something 3 to 4 weeks, some of them up to 2 months, right? So very evidently, you're seeing that a lot of the retail volume that's coming in is mostly newbies, right? And of course, most newbies typically, myself included, when I first started, somehow we have this thought process that, if we come in the market, somehow we know something that someone else doesn't know, and somehow we know can somehow make money, we have this. Unfortunately, I think we process that, if we come in the market, somehow we know something that someone else doesn't know, teach you a lesson, and somehow we know somehow we have this. Unfortunatally, I think thought process. Somehow we have this. Unfortunately, I think thought process that, if we come in the market, somehow we know something that someone else doesn't know, and somehow we know somehow we have this. Unfortunately, I think thought process of them. Somehow we have this. Unfortunately, I think thought process that, if we come in the market, somehow we know something that someone else doesn't know. Somehow we know. Somehow we have this. Unfortunately, I think thought process of them. Somehow we have this. Unfortunately, I think thought process that, if we come in the market, somehow we know something that someone else doesn't know. Somehow we lot of investors around will definitely be stuck, right? I don't know if there are any newbie investors that are watching this right now. I mean, I they say there's actually a loud echo from that. I don't know if there are any newbie investors that are watching this right now. I don't know if there are any newbie investors that are watching this right now.
Yeah, so do you think that
I don't know if there are any newbie investors that are watching this right now. Pretty bad. Okay, so let us sort of you guys
I'm mute. Is your computer mute?
Yeah.
Yeah, mine is mute also.
You guys mute?
Yeah,
I'm both mute. My laptop and both my thing is mute.
Screeching, oh my gosh.
Decepticons.
We can see your comments. Maybe just type in now.
You want to type in on your phone? Echo keeps looping. Is it the echo or what's going on?
No, okay.
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 Now, okay. All right, awesome. So where were we? Right. Yeah. So the market was in a frenzy in the past 2 months, right? And of course, it's basically like a fear of missing out. Is that everybody starting to buy shares, and then people want to buy shares as well. And whenever you go online, and because we were at home, most of the time we were online. And the moment you start to search stocks or investment on Google or Facebook, then you get a barrage of people who come in and talk about stock market, right? And these guys just pop out of nowhere, right? And they just come in and just just go gung ho and just buy, right?
Punch left, punch
go
right.
all the way.
Buy glove.
So buy gloves, buy healthcare, buy whatever.
There's only buy glove. all the gurus in those periods all buy glove.
Yeah.
Period.
Yeah. So yeah. I mean, maybe these newbies that you mentioned, maybe they were being misled. Do you think so?
He said Alvin repeat for someone. Somehow we know. Okay, I don't know. We missed what you said last 5 minutes. Should
Actually, we didn't say anything for last 5 minutes while we're getting the audio on. we were chatting nonsense really, while you're getting the back on. So you really didn't miss much.
Yeah.
Yeah.
Just now we were actually talking about the audio, so you didn't miss much.
Yeah.
So don't worry. Yeah, we actually started the conversation again.
Yeah. I think okay. What's dangerous now? We had a lot of online gurus that popped out from nowhere, and I think that was even in the US. I mean, not just locally in the US. I think it was quite a famous YouTube star who comments on sports, right? Sports. He started a YouTube channel just to people to watch him trade, right, during the lockdown, the global lockdown, right? I think he had attracted something, a huge amount of viewers, just guys following his trades, right? Knowing that he has no idea, but I think someone just wanted to cling on to something, right? I think we're kind of seeing it slightly repeated again. If you guys are online, and obviously if you're a follower of equities tracker, you're likely to be served ads that has something to do with finance or stock related, right? Because I get served a lot of these ads, and I'm seeing a lot of new gurus out there again.
Who look like college students, right?
I can tell you they got longer hair than me, lah, right?
Oops.
All right. But you know, it is quite a worrying sign, right? And I guess the whole idea here is that, I mean, if you're not in the market and you don't know, and you kind of get in there, like like Peter was saying that everyone is asking to buy gloves, right? I mean, naturally you will do that, especially if the newbies that all came in during the MCO period, right? I think a lot of them who kind of got in at very high prices are probably stuck right now. I think that's where the audio got cut off, right?
Yeah.
I mean, I'm not sure how many of you guys are newbies in the audience and you're kind of stuck, right? And you're not quite sure what to do, right? Comment in the section below, right? Curious to hear.
What do you think, Peter? This frenzy that we see in the market, was it caused by people having the fear of missing out that ride? Or is it because they are basically influenced by these so-called online gurus?
I think it's both factors that come together. On one hand, when you start to see people talking about how easy it is to make money in the market, when you see your neighbors, your friends, your colleagues, when you start to earn an extra few thousands from the stock market, and you think that, well, it's very easy to earn, and that will actually prompt you to actually try to learn something from the online gurus, and it goes through that cycle, right? And it's but yeah, I mean, to a extent, I agree with Alvin. Actually, it's quite worrying. The last, see, if I think the biggest worry for myself is this period has actually somehow let people have the false assumption that investing in stock market is very easy, and it's very easy to actually make money in the market, right? And I mean, for those who are more experienced, who have been through the stock market, I mean, you and I will know actually that is very, very not true, right? Stock market is really not an easy place to actually earn a return out of it.
Yeah. So yeah, guys, I mean, now is a challenging time. Now is where, like you said, right? This is where the test comes, and I mean, if you look at Facebook right now, these so-called online gurus are pretty much quiet now, isn't it?
Quite muted.
Muted. I
don't see much ads coming out.
But I guess going through this period, what I can say, it's going to be very rewarding, because now is where they say if you ask me what you do today, right? And you're investing over the long term, you're probably going to be, my view, if you buy good stocks over the long term, in the next 5 years, you're going to be probably much better off, right? By preparing yourself, educating yourself properly, and actually building an actual portfolio that has a strategy, and not just kind of simply tembang and kind of find out which penny stocks to buy and things like that, right? I think you're going to be a lot better off using those strategies. Now, a few reasons why I say this, right? If you look at where we are today on the macroeconomic side of things, there is unprecedented in the history of our modern economics, right? The amount of M2 and M3 supply of money that's being created, right? If I purely just focus on the US, right? I think US in the last 3 to 4 months have printed up to 25% new US dollars, right? Newly minted US dollars. They've increased the money supply by that amount, right? And if you look at the ringgit versus the USD, and we say, oh, you know what, the ringgit is much better now because we strengthened. That's not the case. Actually, the USD has actually weakened against all currencies, right? Because they've just created so much. Now, when we've created so much liquidity, and we kind of look past what happens post-COVID, say it's 2021 or 2022, right? You've got this massive amount of liquidity in the market, right? And in the US, they're literally just doing what they call helicopter money, right? Which means that they just print, and literally now it goes directly into their e-wallets, right? Cash App or Square, right? And you've got sort of this liquidity in the market, and the whole idea here is that there's only so, the whole idea about inflation is about more money chasing fewer goods and services, right? So if our goods and services don't expand, right, at that 25% rate, and I'm quite sure they hasn't, right, you're going to see pockets of pockets in asset prices that are actually going to inflate, right? So in the next 5 years, if you're going to assume that we are in a low interest rate environment, and we remain this for at least a 2 to 3 year period, or at least a 5 year period on average, you're going to see that asset prices are likely going to outperform rather than you putting money into FD. So this is really, if you ask me, a great time if you're new, right, to actually get started, but get started seriously, right? Not on stock tips, not on asking what people want to buy, but actually get started in setting up a proper portfolio and investing over long term, right? So put money in there that you don't need for the next 5 years, right? That's what I would do, right?
Yeah. Is there anything, Peter?
Nope. If I stock more, my bazooka will come out.
Anyways, I think it's not just newbies, right? Because over the past 20 years, I've also known people who have actually invested, and they do go through this period where they make money easily. But over the long run, you know, you maybe let's say you make about 1 million ringgit, right? Let's say, but over the years, that 1 million ringgit actually is all going to be wiped out if that person is not prepared, right? Because this is like a bonus. This is like 𝐶𝐸 actually came in and give you that ang pao, right? But the question is, the 𝐶𝐸 will not be here. 𝐶𝐸, by the way, is God of prosperity.
Prosperity, yeah.
Right? So he's not going to be here all the time, right? And the market tends to take most of the investors, people's money, especially newbies, especially people who do not know what they're doing, like what you mentioned earlier. So I've seen this happening and again, and it's not just newbies. I see people who have, you know, over the 5 years have gained some money, but lose everything in the next 1 year, right? So what does it take, right, to actually continue to make that consistent returns?
I think, as with anything you do, right, there is always an element of effort. If you can really achieve something without putting much effort, then you need to ask yourself whether are you in dreamland or in reality land. It is totally impossible. Right? The only way to actually, if you really want to, in the lack of a better word, I really want to prosper or do well in this line of investment, you really need to dedicate a big part of your time to actually learn and study and continue to learn. It's just continuous learning, right? That's really, you can't avoid that. If you think that you can just don't do anything or don't put any effort to learn and expect that you can just invest in any stock and make money out of it, that's pure luck, right? And one day your luck will run out.
So do you believe in 100% passive income? So I'm taking lines from what what's quite common beliefs out there, that, you know, invest in stock market, leave it there, and it's 100% passive. Do you think that can be achieved?
No, you see, you look at, they talk about passive income. They didn't talk about passive effort to generate passive income. There's a very, very big difference with the terminologies, right? So they only tell the first part of it. No, you all should build a passive income. But it doesn't mean they tell, hey, you should be passive in building that passive income. You know? In fact, you need to put in more effort, more active to generate the passive income.
Okay, so don't get mistaken by passive effort and getting passive income. You still need to be active. You still need to look at the market, look at the businesses, and so on and so forth, right? So don't just stay passive, lah. But I think that's the message that's being sent out. People is like, you know, it's so easy to actually build a passive income. You just buy a stock and then just hold it like forever. You know, and then you just get yearly returns. So the question right now is, you guys can ask questions if you want to, right, on the comment section, so that not only three of us talk, like, it's a discussion that we want you to be involved as well, right? So please do ask the questions. So
I actually just want to add, right, I think probably one of the most difficult things for an investor to do is not to buy and then lose money and then hold it for a long time. It's actually to buy and hold a good stock that continuously grows over time and to add to that position. Psychologically, it is a very difficult thing to do over the long term. Because at any point in time, you're going to be tempted to take profit. Look, imagine if your stock went up 3 times, right? Take profit or not, right? Yeah. I mean, there's no right answer here. But, because I looked at it, someone commented that, if I bought Public Bank 30 years ago, it's at $1 and so on and so forth, right? Yeah, yes, if could, right? But for the person who was able to do it, psychologically, you could be very, very much prepared for it, right? So it's not just what we call learning how to do it and all, but it's also to actually season that mind, that psychological effect that this is the plan and I'm going to stick to my plan no matter what happens externally. And one of the biggest things is always external noise, right? That day when Trump got COVID, stock market, I think the futures went down. I think within the same day, futures went down and then it came back up again, Dow futures, right? So a lot of these external factors, kind of nudge you to question yourself, am I actually doing the right thing?
Yeah.
right? And I think that's where a lot of investors they struggle, right?
Yeah, because it's on hindsight, it's always easy to say, right? Like, okay, you buy the stock at 1 ringgit and you hold it until today, it's like 100 ringgit.
Yeah.
But the journey from 1 ringgit to 100 ringgit, like you mentioned, is it can be emotionally difficult if you are not prepared for it, right? Because although yes, you can hold, but if the price starts to fall, even let's say 10% or 20%, you might be scared. And over the period, let's say about 20 years, we have seen this crisis, like in 2008 when prices start to come down. So how do you manage this, right?
There's only 2 instances where you're able to hold for such a long term. Number 1 is either you're totally convinced about what you're doing, or number 2, you've totally forgotten what you've done.
Yeah.
I guess mostly number 2 lah.
I think so.
Number 2 is
I didn't realize I got this stock 20 years ago.
Number 2 is easier, right? Number 2 is easier, right? You just buy it and then forgot that you even bought it, right? And then just leave it there, right?
Yeah. So how does an investor, how can they prepare, right? That's the question, right? For now, if let's say I've just started investing, yes, I may have made some money during this period, but how do I continuously generate the kind of returns that I want? And of course, like you said, returns may be will not be as high as what we've seen previously over the past few months, but can we still generate that kind of income, the kind of returns over the long run? So I'm not talking about short term, right? Over the long run, are there still opportunities? And how do you do it?
Okay, I think if you look at 𝐾𝐨𝐬 long-term return, right? When I say long-term, it's more than 20 years return. 𝐾𝐨𝐬 return has always been hovering around on a per annum basis 6 to 7% kind of return. So I always advise investors, you have to be very realistic in your expected return or annual expected return. If your 𝐾𝐨𝐬 return is around 6 to 7% per annum, well, I think it's reasonable if you put in more effort. That I think hitting 8 to 10% return per annum is very realistic. It's achievable. So even at this period, you ask me, can that per annum kind of returns achievable? I say yes. Of course, you're putting effort to it. But of course, if you tell me if I expect to generate 50% return per annum consistently for the next few years, well, you need to be either Jim Simons, or you need to be Warren Buffett, or you need to be either Peter Lynch, or you need to be Charlie Munger.
Or it could be a scammer.
Or it could be a scammer.
Oh, sorry?
Or it could be a scammer.
Oh, scammer, yeah.
That kind of
Ponzi scheme, right?
Yeah. I mean, like Warren Buffett, how much? What is his average returns a year?
Long term,
right? Yeah.
Long term is 18
to 20.
18 to 20,
20% only, isn't it? So if you make like even 20% a year.
No, but that's over 50 over years.
Yeah.
And it's compounded.
Yeah, it's compounded.
Compounded,
right?
yeah.
Yeah, so I mean, if you can make that kind of returns, then of course you can be Warren Buffett in the long run, right?
Yeah.
So what's a realistic returns that people should be expecting yearly?
I would say personally, I would say 8 to 10%. I'm not sure about Alvin, but my personal level, I think 8 to 10% is a reasonable expectation. Something that can be achieved realistically on a consistent basis.
I guess depends how active you are. I mean, if you have a 9 to 5 job and you kind of do this part-time, I'll agree with Peter, 8 to 10, right? If you kind of passive, a bit more passive lah. But if you're a little bit more active and that's all you do and it's your full-time job and you go and visit companies, you attend the AGMs, you speak to them, you dedicate a lot of that time to it, right? My personal target is to double every 5 years, right? So which is about 14.4% compounded return, right? That is my personal target lah, right? And I think if you see, when I did that, so from 10 years ago till now, right, we've actually managed at 15%. But how we've done it is that you kind of have to look at it. Malaysia was the worst performing market in ASEAN, right, in the last 10 years, right? Until recently, because glove stocks started being put in the index, then now we outperform everyone else, right? But if you look at it, I think Malaysia is kind of very overlooked market. I think we are largely a very overlooked market. Even Malaysians want to invest in US. Right? We're not sexy. We don't have that branding. You don't have that Tesla. You don't have that Facebook. You don't have those sexy names behind it, right? Everyone in the world wants to go in US, invest US, right? So in a way, for value investors, Malaysia gives us quite prime opportunities. When it's like when everyone else is looking somewhere else, you want to go look somewhere else, right? That's kind of the premise of value investing. And I think by and large, because Malaysia has been overlooked, right? I think there are some gems that we can find, not just locally. I think across Singapore as well, the retail participation is very, very low, right? And if you look at the SGX market, I think it's also quite an overlooked market in terms of equities. I know they're very big on derivatives, right? But generally, you kind of look at there are good stocks trading at very, very low prices, right? If they were a US brand and they were in the US, that won't be happening, right? And the great thing about being in this region is this, right? We are emerging markets, right? So which means that that means our base of measurement versus the US, right, is actually much lower. So for us to hit that 4-5% kind of GDP growth, right, I think it's to be expected, 4-5%, right, on a macroeconomic basis, right? But for US to grow 4-5% is actually, you're really shooting for the moon. It's quite, almost close to impossible, right? So maybe the message here is kind of fish where everyone else where no one else is fishing, right? Perhaps you are finding some big fishes that you don't know even existed.
You have interesting examples to show that actually Malaysia is not as bad as people think.
Yes, yeah.
Yeah, I guess so. I mean, if you look at, there are stocks. I mean, I think the Malaysian market has opportunities for different kind of players in the market, right? You want investment stocks, they are there, right? You want volatile stocks that are there. You want to have speculative. You can trade warrants.
You want loss-making stocks also there.
You want loss-making stocks also there. So it's for everyone, right? So everyone can invest, isn't it?
Yeah. Almost like everyone can fly, except you can't fly now.
Yeah.
It's what is the trajectory of you fly, whether you're flying up or you're flying down.
Yeah.
Yeah, so I mean, because we do trade. I mean, now I'm talking about trading right now. Like for example, investment. You say you don't need to be really active, right? But for a person who is actually wanted to gain more returns, they actually can. But I guess they have to be even more active, right? Like we actually have a trading program, right? Where our objective, hopefully, that everyone is able to achieve. We call it a 3x3, right? A 3x3 trader circle program, where we want to get 3 times over a period of 3 years, right? But that requires a lot of discipline, and if you are unable to follow that discipline, then I don't think so you can achieve that kind of results. So we do have that trading program, and I hope that those who have actually attended our trader circle program will be able to achieve that. And of course, it's my duty, because I'm the trainer, right? Yep. Is to make sure that they are able to achieve that kind of returns. But active means you have to look at the market at least half an hour to 1 hour a day.
Every day.
Every single day, because because we want to find opportunities every day, right? And of course, sometimes there are no opportunities at all. But we also want to know when the price already gone up so much and start to come down, we want to take profits first. So the whole trading idea is totally different from that of investing. And of course, for me, I have actually both investing and also trading portfolio, right? And we basically have to adjust that portfolio, the allocation of the portfolio, right? Yeah. Because when I started off as a trader and I trade the futures market aggressively, but that's not something I want to do over the long term, right? So I try to turn the short term one into long term, or more into passive.
You take your short-term profits into long-term.
Yeah. To redefine that, to make it clear, right? Your long-term investment is by choice, not by force.
Right? Because at the end of the day, you gotta be relaxed, right? Because I used to trade 20, 30 trades a day, right? And I don't think so I can do it now, right? If I look at the market for half an hour, I probably fall asleep right now. But that's what I used to do. But that's something that I think everybody has to have an objective. So for example, if my trading portfolio is probably just 30%, right? I don't want to put too much risk, but that 30% portfolio, if you are able to achieve the results, can actually be quite significant as well. But the risk is high, right? So as a newbie, right, a person who want to start investing, where do you think they should go first? I'll answer my question after this. Should they start short-term investing? That means trading the markets, or should they start building investment portfolio?
I think. I think also there's another question there, right? About if you are small, do you invest in only 3 stocks? That was the question.
So maybe we confine our discussion small. So what is the definition of small first?
I think small can be anything 10,000 below.
Okay, so let's say 10,000 below.
10,000
okay,
right. I think I'll agree that maybe I wouldn't use the word trading, right? Because I'll describe it in my way, where I will say that when you are small, right? to a certain extent, buy and hold strategy will not be so suitable because your objective is actually to build up the capital, right? So at the very initial stage, building up capital is your priority. And how to build up capital is you must be more active. I say, for instance, in actually, I don't avoiding to use the word churning, right? But it's trying to actually, whenever your stock has gone up to 20-30%, you must take profit and redeploy the capital. So I think when you are small, when you're building up your capital is a priority, redeployment of capital via actively taking profit, I think that is a more suitable strategy approach. It's until when your portfolio grows big. Now, again, big is very subjective. Big for different people means very, very different thing. But say, for instance, if now you have 100,000 now, right? You may be 100,000. Then you can really reallocate. Maybe, okay, of this 100,000, maybe 50,000 I want to use it for long-term investing. I can buy and hold. You still got another 50,000 where you can trade, right? But if you compare, if you only got 10,000, you can't be putting 5,000 for long-term investment and 5,000 for trading, right? I mean, it's more difficult. Yeah. I mean, that's my take. I'm not sure about Alvin.
Alvin?
Actually, maybe my personal journey lah. I mean, when I first started, my initial capital was only. I remember my first trading account was 18, so it was 20 years ago. It was 1,000 only. That time I was studying in Australia, so Aussie dollars, right? But now probably 3,000 ringgit, right? One of the things, the question here is, at the time I was thinking, should I do a diversified portfolio, right? How can you diversify with 1,000 or 2,000 ringgit, right? It's tough, right? So instead, what I did was I did a very hyper-focused portfolio, very hyperly, one stock only one stock. I knew the stock very well. I invested in it. Then what I did was, what was more important than starting with the 1,000, right, was actually having the discipline to put money in every month. Whatever amount, it doesn't have to be big. You can start with 100 ringgit. You can say, look, I'm gonna do one kopi a day or one Starbucks coffee a day. Now, one Starbucks coffee a day is actually 300 ringgit. Okay, so if you have a really small portfolio, if you put a start with 1,000, 300 bucks is 30% of your original capital a month. All right. If you multiply that by 12 months, you actually start off with 3.6 times more capital than you did with $1,000. If you think about it, and this is just period of 12 months, right? So what I did was a very hyper focus, just focus on one stock. I know it very well. I cover it very well. Everything regarding industry, I just want to know as much as possible, right? Of course, you need to have that conviction that it will work lah. You must have the conviction that this is the right business. You must have the business acumen. I mean, that's the whole point, right? Of course, I'm not asking you guys to do this, but maybe just to share from experience, that's really what I did, right? Really, then when you start, below 10,000 and you kind of multiply to your 30, 50, 60, 70, right? I can tell you it gets easier, right? But your first initial push can be quite challenging. You're going to be challenged at times. You're going to be... there's going to be a lot of noise outside. Some people tell you, don't buy this stock, not good, right? So instead of focusing on many, my advice is just focus on one or maybe two. And when I say hyper small capital, I mean 1,000 is already very small, right? I can't do a portfolio of 15 stocks, for example, right? So that's really what I did, right? Of course, I don't advise you to do this, right? Of course, if you are very determined and you do a lot of work and you understand the risks, right? You may want to check out warrants, right? You may want to, okay? That's just I put a huge disclaimer. If you don't know what you're doing, please don't do it, right? Because that's also a leverage play. That kind of the whole idea here is helps you build that capital in the shortest amount of time possible, right? That's what I did. That's what has worked for me, right? Even today, you don't need many stocks, right? You need maybe a handful, but you need to monitor them very closely. You need to know in and outs, right? I think, as you all know, those of you who've been following me, one of the early stocks that I've covered over the last 15 years is actually 𝐷𝐴𝐴sia, right? So every year I know how many planes they have. I know each plane got how many seats, right? And how many stages they fly as well, right? And how many countries, how many, and so on and so forth, right? So that's the kind of in-depth, at Equities Tracker, we talk about in-depth being data-driven, right? That's the kind of things that work for me, right? Of course, I hope it works for you as well. Yeah.
Mine approach was a little bit different because I did not start with stocks, right? I started with futures market, so that's a leverage.
That's very leverage.
But those who know my story, basically I start small first, right? 8,000 was the minimal capital that you were starting when you start trading, right? And that time I really learned about charting, so I thought, oh, okay, that's it. I already found the secret to investing or trading, right? Which is looking at price charts. And MACD, the indicator, not McDonald's, MACD, the indicator was the indicator that I used. And you know what? It made some money, small money, so happy lah, right? And then that was during the college time. And after college, I decided maybe this is for me, right? Because I really made, it's like making money in this period, and you think, wow, you're a hero already, right? I said, you know what? This time I'm going to sign up, right? So I actually use my university money and go and trade more. So that was in 1997, right? And because we're not prepared for that kind of volatility, I wasn't prepared, right? And the market just tanked. I keep on buying and buying, and futures market is on leverage, right? And every day you get margin calls. So I was buying because price get lower,
average down.
Cannot go lower some more, whack some more. Go down some more. So in that 6 months, I lost 50K.
Oh.
And that money all hutang one, So from family, friends, and that was my university money actually. So cannot go lah. I had to start working back again now, So I took a break for 2 years, and that time I joined the company that sells me that software, the charting software. And that's where I actually get to know and learn from traders. So even then, when I started in year 2000 back again, it's like, I only got 10,000 ringgit now, right? Either make it or break it. That was my mentality at that time. So I tried like 3 or 4 times, put 10,000, silang everything. Make it or don't make it. Because in the futures market, you're trading on leverage. Yeah. Also gone 2-3 times, right?
Yeah.
And then when I started to learn from real traders, and you'll see that a lot of these real traders, they don't go on a stage. They're actually at home or in their office trading. And because I sold the software to them, I actually know more about trading from them. So they told me, for me, my biggest advice was I always look for that big shot, the moonshot. All right. Whereas these guys, they don't look for the moonshot. They actually take small chunks of profits, and your risk will be lower as well. So I decided to give it a try. And that's how I can see that money start to generate when I don't put want to buy 1 ringgit and sell at 10 ringgit kind of thing, right? Yeah. So that's why that's how I started to build a trading plan that has smaller chunks of profits, and then that's how you build it. And of course, like you said, initially when your capital is small, the way you trade is different, right?
Yeah.
I mean, I would not risk everything that I have today and do what I did 20 years ago. But if it's just small money, then it's okay lah, like $5,000, $10,000, right? But then when you start to build, then of course a lot of things like you said, it actually gets easier, right?
Yeah,
because
it gets easier.
when you started, you see, you have to be more active because you want to build or create that wealth first, right? So you have to be more active, you have to trade more. But once you have built the capital, then your expected returns is smaller already. So your pressure also becomes smaller, right? So of course, with big money, your expected returns smaller is actually quite a lot also lah, compared to when we have small money.
Your absolute amount is much higher lah.
Yeah, the absolute amount is much higher, right?
Yeah.
So it gets easier. So I'm not saying that we want to go through that, okay? But of course, if you want to do that, make sure you come for a trading program now, so that I can
come and join Benny for his trading program.
Yeah.
We're having it next weekend, not this coming weekend.
24th, 25th.
You can see him live. It's going to be run on Zoom, right? So you literally can ask him any questions you want for 2 full days, right? Anyway, we're on CMCO, so pubs are closed, restaurants are closed. They're open, but you got to tap out anyway, right? So if you really want to learn from someone who's actually done it before, right? Next weekend, Benny is available. If you are interested, just put in the comment section below. If you want to learn a bit trading, right? I personally attended his class as well. I have to...
Maybe you have to come online again.
Yeah, because my mind doesn't work as fast in drawing those lines, right? I have to re-attend that session again, right?
Yeah, so that will be on 24th and 25th of October. We are supposed to run a face-to-face live workshop on the 24th to 25th.
Yeah.
But don't worry, the education, the training will still go on. So we will do it online on the 24th to 25th. We're supposed to have one in KL on the 31st October and 1st of November. So we're going to put everything on 24th to 25th. I think our colleague will put in the comment section so you can click and get more information. And like Alvin said, if you're interested, you just type in TCP on the comment section so that our colleagues will actually get in touch with you and share with you more about this program, right? So now it's going to be held on the 24th and 25th. 24th to 25th of October is 2 days. Saturday and Sunday is 2 full days. So you have to be online for the 2 full days, right? Yeah. And when we have a physical training again, in the future, let's say the MCO starts to stop once again, if you start to have a physical class, you are able to join that physical class absolutely free. All right. It's just that because we still have to do the training on 24th and 25th online, and this whole thing will not be recorded. It will not be published anywhere else. Only you guys will be attending this. Will be actually going through this whole 2 days program.
Yep.
All right. So this is where I'm basically going to share with you my experience, my knowledge in how you use technical analysis to build trading plans. And like I mentioned earlier, the objective, to actually the returns objective will be 3x3, which is 3 times in 3 years. Okay, but you really have to basically follow that trading plan. You have to follow that discipline. So and all this will be shared actually in a 2 days workshop. All right. So that's trading. So of course, right now I still do trading, but I don't do 20, 30 trades anymore. My objective when I started to build a trading plan is to have only work for half an hour to 1 hour a day. In the morning, look at the markets and then put the orders, and then that's it. Don't see the market, right? And because you already have a plan. So the important thing for me is in trading is to actually apply or follow that particular trading plan, right? And of course, it's always easier said than done. Okay? Emotions will still set in.
Yeah, right? Managing emotions is the most difficult thing, right?
Yeah. So I hope you are able to join us.
Well, while Benny is talking, let me, for those who are not convinced, let me kind of show you if I can share my screen right here. Now, for those of you who have not signed up for Genius, it's absolutely free for you to sign up for 14 days, right? All you have to do all you need to do is go to equitystracker.com/free, right? So sign in, you get a WhatsApp, you can go on and you can check this out. But what I just want to quickly show you is, at Equity Tracker, one of the benefits of this platform is that all our trainers actually show you our portfolios, right? So if you guys can see the screen right now, sorry, if I kind of zoom in, you can kind of see Benny's one here. He did a very short-term trading one, but understand this was actually in June, right? So this was not at the bottom of the market. The bottom of the market was March, yeah, okay? He's actually turned 50,000 into a cool 88.49%, right? Really, really job well done to him, right? So this is on a trading methodology, right? Yeah. That's Benny right here, right? So if you want to figure out how you can get there or do something like this, right? Do check out his session next weekend.
Yep.
Saturday, Sunday, just lock yourself in the room. Treat it as a stay-at-home staycation, right? And then you get a chat with... Now, it's not just going to be fixed and you're just going to watch it for 8 hours, right? There's going to be some breakout sessions, some exercises. It's going to be hands-on as well. So you actually get to use it and really a whole practical experience, right? I'm speaking from my own personal experience from attending his class. Yeah.
So if you look at the portfolio, we have this trading portfolio. Of course, my one is a trading portfolio. And of course, we have that the 10K portfolio, Genius portfolio, we just started in May as well, right?
4th of May.
And that returns 77% without being too active as well. I think one of the key things is that, for those who are interested in the Genius package, one of the questions is how you, Alvin, or even Peter or myself actually use this information available on the Genius to find opportunities or to make decisions.
So if my screen is still being shared, right?
Yep.
Okay, so kind of once you log in, you kind of look at this, right? The whole idea here is that how can you use data to kind of drive that decision making, right? So for example, if we look at, I don't know, any stock that you guys want to look at, what was the hottest stock that has been
Glove lah.
Glove lah. Okay lah. Let's say the top glove, okay, for example, right? The first thing that you actually want to do is figure out whether this company is good or not, right? Not to say whether the price. The second question you need to answer is whether it's cheap or expensive, right? First of all, is it a good stock, right? So very quickly, if you kind of look at, you do a search and you kind of look at these numbers, what we have done here is actually taken all the financial numbers and actually come up with a score for you, right? All these scores are based on fundamentals, which means profit, cash flow, free cash flow, and dividend payouts as well. And we kind of score all companies around this, right? So even if you don't know how to read financial statements, right, we try and actually simplify that process for you first. That's purely from a data perspective, right? So if you want to look at all listed companies in Malaysia, it's actually all in our database. You can find everything here. You can find out their shareholding as well. What's their balance float, what is owned by the public. You can find out who the directors are. You can also find out how often they pay dividends, right? So if you kind of look at their dividends, you see when you look at data, patterns kind of start emerging. So if you look at this in the last 5 years, Top Glove actually typically announces dividends June, November, June, November, June, November, June, almost November, June, and almost November, right? So you kind of form patterns around it. So, and that's really why we use data-driven. We call it data-driven investing, right? Which means that it's not just kind of tembang, but you need to look at information to help guide you to make better decisions, right? It kind of shortcuts the whole thing for you. Of course, we have all these little apps here that kind of help you. For let's say the stocks that we're talking about, let's say Benny's one, we talk about, we call it ideas or automated ideas. The whole idea here is using data. How do we kind of pre-filter some of these stocks that we should only focus on, right? So for example, Benny has this list called tradable stocks, right? So he actually looks for stocks, or the system actually generates stocks that has high trading volume, right? Or maybe you can explain a little further.
Yeah, so basically tradable stocks are stocks that met these two criteria. One is, number one is liquidity. That means it has at least 1 million shares with a million ringgit value traded on a daily basis, averagely over the past 1 year. So you have no problem with liquidity, right? Yeah. Second is these stocks, the stocks in this list here have at least 8% movement a week. Okay, so these stocks are basically alive, they move, and as traders, we need to find that volatility. So at least, if I want to trade, and you want to find trading ideas, I will look into this tradable stock list, right? So that if that stock is not in this list, I may want to step back and then just wait for the next opportunity, right? So the thing about having a trading plan, you actually have steps that you follow, and like you say, it's all data driven, right? I don't listen to rumors, I don't listen to tips, I don't look at news, right? Basically, based on this information, I can at least filter out from the 1,000 over stocks. Now you have about 50, 60 stocks. And then if you look at the ideas app again, you actually have other things like uptrend support opportunities. So the tool that we have is already there to help you, right? One of the problems initially, even when I started learning, and of course I was a student as well, right? I learned about technical analysis is, yes, you can learn everything, but how to apply, right? And yeah, you can learn a lot of things. I learned a lot of things. I learned about MD, MACD, and so on and so forth. But at that time, of course, that was 20 years ago. There is no software. There is no tool to actually help me to actually identify these opportunities, right? And I have to spend like 6 to 8 hours a day going through each and every counter, right? Not all counters, probably about 100 over counters, right? Wow. 6 to 8 hours to identify opportunities. And that's the beauty about technology today, right? You have the computer to actually help you to identify this automatically for you. So it lowers down, or it reduces your time, or your analysis time. So that's what's fantastic about these ideas. And of course, for those who are attending the program, we'll actually show you how to use this to identify opportunities. And of course, this is just a first filter, right? And when we go through the program, we'll be adding other analysis tools so that you get a better probability of winning, right? So, but yeah, these tools are important, because without these tools, like I said, you probably have to spend like 6 to 8 hours a day looking for opportunities. Yeah. And I guess it's the same also for even for investing, right?
Yeah.
You're gonna share with them what do you typically do? I know you don't look at the market every day.
Yeah.
But what do you typically do when you look for opportunities? And of course, I'm gonna ask Peter also as well.
So one of the things that I do like to look at are stocks that have been beaten out quite badly. Right? That means they've just come down, they've been shaved off, from their peaks, right? Some of them can drop as much as 50, 60, 70%. So the lower they go, the happier I am, or the more interested I am, right? The next challenge is trying to figure out if the price does not actually reflect the actual business. And this is the case for the stock market most of the time. It's not efficient, right? Price doesn't equal the value of time. So if we find a decent business but has been battered down their share price for whatever reason, right? Then I'm interested, right? Very interested, because first of all, it must be a good business, right? It's something that I understand. It's there for the long term. Say even pay dividends, for example, right? And the share price has been hammered quite badly, right? So you'll be surprised, even very big blue chip stocks kind of do this as well, right? I can still remember back in 2012, I remember Guinness Anchor went from 22 to $12, right? And that was really interesting times, right? Of course, it's come back up to 22, but it was such an easy kind of 50-60% return on a very safe stock, right? That paid you 5-6% dividends, right? It was a no-brainer, what I call a 10% in your portfolio, right? And of course, we also visited them, spoke to them. They even hosted our ET members, those who are subscribers to ET. They also hosted us at Guinness Anchor, right? CEO and a CFO as well, right? I like those stocks because they are very low in terms of risk-weighted return, right? You might look at the return is 50-60%. It doesn't look like a lot in 12 to 18 months. But on a risk-weighted return perspective, actually it is a great return because you're not taking a lot of risks for those kind of returns, right? Because you're not going to get it in FD anyway, right? So one of the easy ways we look at is actually looking at what we call bottom fishes, right? Stocks that have actually come down quite significantly. So you can see, we can filter it from their 3-year high. You can find stocks that have actually fallen 90, 70, 80%. And what we've done here, we've actually looked for stocks that are still decent. That means they've got net profit, they've got cash flow, they've got free cash flow, they've got operating cash flow as well, right? So good companies with a decent track record, right? In this case here, we actually filter for stocks with 80% and above, right? What we call scoring, right? They have fallen quite dramatically. So, people say the market is still up and don't know what to buy. I mean, here we have kind of filtered out a lot of stocks that you can see from this link here. It's dropped quite significantly, right? So, of course, not every stock on this list is something that you would buy, but it's immediately a stock that you can investigate, right? Of course, you don't have to look at 1,000 stocks, right? You can look at perhaps even 100 of these. The question is, can you find 5 gems and kind of look at them today at depressed prices? Will they be better off, say, in the next 5 years? Right? I think there's a very high likely, that's a better way to kind of do investing than kind of just ask, hey, what stock to buy? Hey, what stock's hot? You will never kind of catch, if you're just following news to buy stocks, you will never catch that, unfortunately, right? You need kind of a system and something that you can depend upon, right? Which is what we say is data here.
Yeah. So that's why, I mean, we have these tools to apply, right? Where you've learned, right? I mean, yeah, we can learn. You can be a good a person who can actually analyze counters. You can analyze financial statements and so on and so forth. But imagine you have to analyze each and every financial statement, even if one company over the 10 years, right? It's going to take a long time. So basically, the tools that we have here is basically to help you to minimize that time for you to do that research, because it's all there, right? Like Alvin mentioned, you see stocks that have fallen more than 80%, 90%, then you probably just uncover some of these gems, but you want to dig deeper later on to also find a better gem, right?
Yeah.
But it helps you to actually find those gems in the first place.
Yeah.
Because without this tool, you probably where to find in the first place.
Correct.
Right.
Yeah.
So basically we are actively using these tools because it also helps us to identify opportunities, right? Peter, what about you? How do you identify opportunities?
I think also related to an earlier question, for a beginner, there was an earlier question whether for a beginner investor, should we look at bottom-up approach, top-down approach, or bottom approach?
I think there was a question on ETFs and what was that the one?
No, they actually asked if you are a beginner, should you analyze stock based on bottom or top-down? Basically, what top-down means, actually you look at the economic situation, then you look at the industry prospect, then only you zoom down to the company that you want to invest. That's what I call as a top-down approach. Whereas a bottom-up approach means to say you identify a company and then you zoom into that rather than you go through the industry and come down on that perspective. I admit there's no right or wrong. It's a combination of both efforts. Sometimes it could be a top-down, sometimes it could be a bottom. It really depends on what comes to you, right? My approach will be, first, I will usually do financial analysis. Like what Benny mentioned, that's where all these tools come very important. You actually save your time to actually do filtering. So for instance, if you have your own parameters, like for instance, my parameter is positive operating cash flow, right? So you can actually use the tool, then you go and scan through companies. Okay, what are the companies that have been consistently positive operating cash flow over the last 10 years? Right? So then you actually have to filter all these companies based on the parameters, which like what Benny mentioned, you don't have this software. Imagine if you glance through 900 over annual reports, go through it to actually find companies that have been profitable for the last 10 years or positive operating for the last 10 years, right? Then the second aspect of it is when you conduct all your financial analysis, if you like the company, then comes the next very important element, which honestly, I think a lot of retail investors are, how should I put it, at a disadvantage in this aspect, which is actually corporate assets. Right? If you look at the reality of the market, is that corporate assets is something that is very elite, only to fund managers and also the analysts of those big fund houses, right? And it's something that, honestly, being a retail investor, that's something you don't have.
Yep.
But that is also a very important element, because ultimately you can have done your financial analysis. As you're doing a lot of financial analysis, there's still a lot of questions that are being raised that you come in your mind. You know, why are you profitably down this year? Why are your margin down? What competitive advantage you have compared with your peers? So on and so forth. There's so many questions that you actually want to ask and you need to know before you can actually make a more informed decision. But say if you don't have corporate assets, the only assets you have, unfortunately, is your annual AGM. Right? That's the only chance you have. And you know, for those attend AGM, unfortunately, your opportunity to ask questions is quite limited. Right? So again, that is where 𝐸_STRIKER, we're trying to bring value here, right? We're actually trying to bring corporate access to investors, right? To actually give you the same advantage or the privilege which was only, all the while, only fund managers and analysts enjoy, so that as a retail investor, you also have an equal advantage to actually have a chance to actually hear what the management have to say, and even to ask them questions and to resolve your queries that you have with regards to their business.
So I think that's what we are trying to do. We are trying to bridge that gap, right, between the retail and the professionals. Of course, if you look at even 10 or 15 years ago, the gap is even wider, right? Retail investors are basically just follow news. But I think now with technology, we actually are able to bridge that gap. And the good thing about 𝐸_STRIKER is because it's actually a full suite. It's not just a software, right? It's just not the tool. It's actually a full package of what investors need to have, like you mentioned, right? The corporate access as well. So that's why if you're a member, if you're a Genius member, you actually get access to what Alvin have just mentioned to you, the software, the tool, the screeners and all that to save your time on your research. And then we also have our monthly club meeting where we bring corporates to you. Okay, you don't even need to wait for their AGM, right? We bring them to you, and it's exclusive, so you can actually ask questions directly to the CEO or whoever's, or CFO or whoever's coming for that corporate access, right? And apart from that, of course, we also provide that training, right? Especially if you have not, or you don't have any knowledge at all. If you're still a newbie, like what Alvin mentioned, how do you start, right? So if you're a newbie, do you think that they should get knowledge first, education first, or they should go through the school of hard knocks? That means there are a lot of people who says, you know what, no need to go and learn one now. Just go and try. You just go and take the money and then just try yourself and learn from it. What do you think?
I think if it's not your money, then and you are happy to take losses because it's not your money, then that's okay lah, right? Because it's not your money anyway, right? But I can tell you that the stock market will teach you lessons very quickly, and most of the time they are very expensive lessons that sometimes you pay for it and you don't even know what you did wrong. Right? When you lose money, some people don't know why they lose money, and they keep kind of doing the same thing over and over again, right? So I think a lot of us don't realize, they say, oh, I lost 10%, 20%, but that number could be 10, 20,000, for example, right? But they say, oh no, if you want me to spend 200 ringgit to learn, it's too expensive. No. I do it online. Everything is online. It's all free, right? So the ironic thing is this, right? I think in Asia, we put a lot of emphasis on education for our children, never for ourselves, right? We would spend, I see, parents spend tons of money sending the kids to tuition or schools because they say education is so important. But somehow, when we become adults, right, we realize, hey, I earn, or whatever I earn is just to send my kids to education. Still education, but we never kind of put that aside for ourselves. I don't know why. It's always seen as an optional, a discretionary product, right? Only when I need it, then I do it, that kind of thing, right? But I think knowledge is ultimately power, right? Because in the stock market, it's all up here that's actually going to make you money. just because you can click faster or you can type something faster, it's not going to give you an advantage, right? So it's all about here. So how much time have we spent actually training this thing up here that's actually going to make you money, right? Because that's essentially what investing is.
Yeah. What do you think, Peter? Gain knowledge first or go through the school of hard knocks?
I think you need both. You see, the biggest challenge is you look at all those finance theories, right? Are mainly written by professors or academicians, right? And when you try to apply those finance theories you learn in university, or you try to apply it on the real life, most of the time it doesn't work, right? But you really need both. On one hand, you need to have an understanding to learn how it works. But purely by learning how it works, if you don't get involved in it, you wouldn't know how it works, right? So for me, I'm more realistic in the sense, I think you cannot avoid. The best lesson is still the mistakes that you learn, right? The best lesson you learn and which you remember the rest of your life is the more money that you lose. And it's your own money. I think and that's actually, you have to, there's no two way about it.
But sometimes people lose money also, they don't know why they lose money.
Yeah.
They say, I buy
No,
stock.
they need both. They need to learn also.
So I think we really need both, right? Because you need to go through the experience.
Yeah,
Because
yeah.
when you also trade or invest with your own money, then your emotions start to set in and so on and so forth, right? I agree. We have to have both. But I think for me, education will be number one. I think we need to learn first, right? Like Alvin said, because if you don't learn, like for example, if you don't go to school and learn mathematics, and then you got it wrong, and you do not know why you got it wrong, also, right?
Yeah.
So I agree that for me also, I think education. I mean, learning first is important. So at least when you lose the money, when you pay the tuition fee, you learn something.
Yeah.
Right. There are a lot of people who pay tuition fees but don't learn anything, right? And they keep on doing the same.
That's it. I remember one of my Facebook posting, right? I said one of the problem with humanity is ignorance. No, it's either you're genuinely ignorant, which you don't know what you don't know, or you're willful ignorance. You choose not to know what you don't know.
So I guess and that's the reason why, like I mentioned earlier, in Equity Tracker, we actually have this full suite of we call it a platform actually, right? We don't really call it a software or just education. It's actually all encompass everything, right? We have the education so that once you're educated, at least you know how to use those tools. To apply it, we need the software, all right? And of course, once you have the tools to apply, and then you start to go into the market, and then if you want to get at least a feel of the market, then that's where we bring the corporate leaders to come in and actually share them, because they are not just sharing the company, they also share the industry, right? Most of the time, and what's happening in the industry. Like for example, we're gonna have one on next week
on Solar West.
On Solar West. So maybe you want to explain what is it going to be taught or what's going to be shared during that club meeting, so that the audience would know what they can expect.
I think I think for those who are not familiar with Solar Vest, we always think the most people know is solar vest for solar panel. That's it, right? But the nature of business is actually not so much of manufacturing solar panels, right? They are more involved in actually, in a very layman word, installation or creation of solar farms, or even very large scale solar farms, or involved in actually creating a package for commercial and residential to actually install solar panels above your roof. So that is more of their business, but not so much of manufacturing solar panels, right? That's why we find something very interesting. And you look at it, there's been a very big changes in the solar industry in Malaysia. If you compare to what it was 8 years ago to what it was now, the industry has actually gone through a lot of consolidation, a lot of changes, a lot of declining in rates, and so are the panel prices. So a lot of factors that are really interrelated to the solar value chain. That's why we actually invited Solar Vest here to actually let investors understand more about this, in general, called a solar industry in Malaysia, on that perspective. So you get to learn quite a lot about what actually is happening in the solar industry in Malaysia. And I must stress, when I say solar industry, I don't mean the manufacturing of the solar panels. It's really on the solar industry itself.
So that's one of the philosophy that Equity Tracker have on investing as well, right? Because we can see the numbers, but we also need the story behind the numbers. Right. And this is where you actually get access to the story behind these numbers for you to open up your eyes. Like, for example, Tesla. Everybody talks about Tesla today, right? Everybody's asking, is Tesla a car company or a technology company?
Yep.
Right. So when you dive deep into, if you ask Elon Musk to sit here and if you ask questions, then you can actually know what is in his mind, right? So same thing with most of the companies as well. We may see the company as in front, just on the surface, but in reality, they're actually doing things that we may not know of, and that's where the corporate access comes in.
Correct. And also on this solar, this is a question from Darren Chong, right? Is the solar vest the same as Great Tech? Maybe just for viewers' benefit, right? Okay, Great Tech is very different from solar vest. In fact, they're very different parts of the value chain, although both have solar-related business. What Great Tech's core business is actually, I'll call it automation. Meaning to say, you build automation machine for factory lines or manufacturing lines, right? So how Great Tech got associated with solar is because one of their clients is actually manufacturing solar panels. So what Great Tech does is that they will actually design the machine or the automation process to actually help their customers in the process of manufacturing solar panels. So technically, Great Tech is in the equipment business or automation business, and it happens that one of their key clients is actually manufacturing solar panels. That's where the association comes about. Whereas Solar Vest, they are not involved in the solar manufacturing business. What they do is they will buy the solar panels and install it either on your roof or on commercial or in a very large piece of land, which is called a large-scale solar, and to generate income from it. Or not them generate income, but to help their client to generate income by ultimately selling the electricity generated by the solar panels back to TNB or Tenaga Nasional Berhad.
Right.
So someone commented that there's an upcoming IPO, 𝐸-maiden, right? 𝐸-maiden, right? Yeah. That's also similar business. Same. Yeah.
Okay. So as I was saying, right? So when you subscribe to the Genius package, you don't only subscribe to the software, right? You actually subscribe access to all the things that we have mentioned earlier, right? The club meetings, even the training. You can always go to ET Online Campus, which we have, and if you want to go more advanced, you can attend like the Trading Circle program or even VIP programs that we actually have already investing, right? So we actually have a full suite of tools, and we want to be one platform. And I think for Equity Striker, if you go to Equity Striker now, it's not just a fundamental.
Yes, we have a technical app. Yeah.
Now we have a technical app, and you can actually save your work, which I've gone through yesterday, right? And a lot of things there you can actually do. So we are continuously trying to improve it to make it easier for you guys. I know everybody wants it as easy as possible.
Yeah.
Right. Previously, it's all about you doing yourself, and we try our best to actually do it some for you. Yeah. Okay. At least to save you a lot of time.
I guess add on one point, right? I think somehow the value of knowledge is very underestimated, right? In the sense, I'll give a very good example. I mean, for those who have been following ET since last year, right? Let me put it this way: for those who have been following ET since last year, I mean, who have been surprised with the latest petrochemical companies like your Petchem, your Lotte, that they've reported weak quarters in March and June? I think whoever has followed us, they are not even surprised, or they don't even blink an eye when they saw the numbers coming out. Simply because end last year we actually have a very special session on petrochemicals, which we already actually have shared our views that why we think resin prices will come down. And if resin prices will come down, the first parties to be hit will be petrochemicals. So that's what we meant by that's actually the importance of knowledge. When you already understand that this is the industry trend, this is the dynamics, the subsequent poor results, you will not be caught by surprise. Hey, you know what? Why suddenly Petchem got such a poor result, or why suddenly Lotte got such a poor result, right? And that's you're talking about 2 consecutive quarters. So again, for those who have actually been with us, right, the last 2 quarters result should not come as a surprise to anyone. So that's actually where the value of knowledge is, or understanding the industry dynamic comes. Right?
Yeah. And that is important, and I think that's one of the reasons why we actually when the MCO started, we started these copy time sessions, right? Because we are committed, right? If you ask us for the knowledge and if you ask us to at least share the knowledge with you, we want to make sure that you guys are successful as well. It's not just you learn for 2 days or 3 days and then poop, okay, bye-bye. You're on your own. I take your money and then bye-bye, right? Yeah. So that's the reason why we have been doing this, and until now we are still doing it. As long as you guys keep on supporting us, you know what, we will try our best to actually support you guys as well, right? And that's very important, I think. Like you when you come up on a copy time, or I come up on copy time, or I come up on copy time, there's always new things that we learn, right?
Yep.
Like updates, you know, about the resin prices, updates on palm oil prices, updates on what's happening in the market, what's happening fundamentally in the company, and so on and so forth. So that's where we are committed. I think, you know, we are not just an education company, right? We are like-minded investors like you guys as well, right? That's very important, right?
Yep.
Because we have gone through the whole thing before, and we basically know what we need, right? And that's the reason why we keep on improving our data. So as an investor, one of the things that for me right, I don't have to be called a sifu, right? for me, because we are still students of the market, and it's continuous learning as well. And we hope that whatever that we learn in the markets, we're able to share with you guys as well, right? That's our main objective. I know people have been calling sifu and all that. You guys can call us whatever you want. For us, it's no difference.
Yeah.
Okay. Maybe Peter looks more like a sifu.
Please don't call me that.
The less hair you have, the more higher chance of you becoming a sifu.
Yeah, he was a sifu, but he's coming out of the sifu level already. You know?
Yeah, now I'm growing my hair, right?
He's coming out, you know, Sifu got no hair. But notice Grandmaster got lots of hair. So he's moving to Grandmaster stage. Right?
No, Benny is already there. He's got the most amount of hair.
Not yet white yet. The white one is, you know, when you come Gandalf, the white, then maybe. Okay, so so we all agree that you know, education comes first before actually you put your money into investing. And of course, you have to basically go and experience investing and trading yourself. That's where we actually learn. But make sure you have the knowledge so that we know what we learn. So apart from that, right, getting the knowledge and experience it from the market, what does it take for them to continue to be successful in investing?
I think I see a lot of people start and then they kind of lose steam and then they kind of leave it off, right? But I think one of the most important things that we can never underestimate is time. Time is something that you cannot buy back, right? Unfortunately, right? The longer you delay this, the longer you keep kind of delaying this process. We know at some point investment is very much part of our lives, right? We can't delay it, right? But the longer you delay, the more time you actually lose. You technically don't lose money, but you lose the opportunity to actually learn or learn a new skill set, right? So, you know, my whole mantra is that it's never too late to start investing. When is the best time to start? The best time to start was 20 years ago, right? That's essentially right. Warren Buffett says that as well. You know, the best time to plant a tree was 20 years ago, right? So
you haven't mentioned the next best time is when?
The next best time is now, right? So that's the whole idea. So time is something that I think we need to put very high value to, because no matter how much money you make, you unfortunately can't buy back time, right?
Yeah. You know, I think one of the things that a lot of, especially when we were young, was you know, the impression that investing is a rich man's game. Right, so people think, you know what, I have to work hard first and get money first, then only start investing.
Yeah.
Do you think that's that works? Gain money first and then start investing.
I think most people gain money first, start investing, and then they lose money, right? How billionaires become millionaires? They invest in stocks, right? Or how millionaires become less than million, right? They invest in stocks, right? And then that was very common, especially in the last crazy bull run we had pre-97, right? The best time to start is now, obviously, right? You don't have to start with a lot. I think you just need to have a plan, ultimately, right? And just be very consistent with that plan.
Yeah. What do you think, Peter? Should you save first, make money first through your active income, and then only start to build your investment?
I think, you see, what is more important is actually not the amount, but the habit. Do not set a number saying that, okay, I must have at least saved 10,000 in my portfolio, then I'll start investing. What is more important is that constant practice. Start small. Maybe you have 500 ringgit this month. Start, at least buy a stock or invest in a stock. There. Next month, you have another 300-400, again, buy another stock. So it is that starting and the constant continuation of that to make it into a practice, that's actually a more important. That's why I see, take savings for instance, right? Which is better? Do you save once a year, or do you save monthly, every month, a little bit of amount? Right? So it is that constant doing every month that becomes your practice and becomes a discipline that will actually build the right mindset for you to actually be successful in investment. You say, wait until 10,000, but guess what? Sometimes when you build up to 6,000, suddenly you need to buy a new car, change a car, boom, the 6,000 will be gone already.
Get married, have a kid.
Get married, have a kid, all right?
Yeah.
I need to buy iPhone 12, this 6,000. It will never end.
Yeah.
So
too many distractions.
Exactly. So you wait for the 10,000, you go wait forever for your whole life. So the best time to start now is actually now. Just get started with whatever amount you have. More important thing is get started.
I think, you said, I just actually want to mention that as well, right? It's the habit to start, because it's always difficult to start something. Right?
Yeah.
Like, for example, you want to lose weight, you want to go gym, but you say maybe later. End up never go to the gym.
Yeah.
But I think we have to set our priorities right, right? Like the question that we all have to ask ourselves is basically, is investing important? Right? Because if investing is important to grow and preserve and grow your wealth, then you should make it as the first priority, right? Because if you think that investing is something maybe later or is not really needed, when you only get money, like you mentioned, you save a lot of money, and then a lot of things come along the way, and because investing is not your main focus, you become like, when I got time to do it, I do it. When I got money to do it, I do it only.
Trust me, you'll never have time.
So okay, so if investing is really important, and I think we have already said many times, and the reason why we are so passionate about investing is because we know it is important, right? And that's why we put the focus on investing.
Let me put the perspective. Let's just, for instance, assuming now you got 300 ringgit to invest, right? Then you might work out your brokerage cost. You say, hey, my brokerage cost of 300 ringgit is 12 ringgit, for instance, right? You say, hey, that's a very big percentage of 300 ringgit. That's about 4% of 300 ringgit, right? They say, hey, no, it's 4% of that. Then you forget it. See, but because of that 4% of that 12 ringgit, who knows, this stock may double to 600 ringgit. But you see, you're being what, penny wise and pound foolish, just because you think that 4% of 300 ringgit is too much for me to invest. You miss the whole subsequent gain out of it. Or you start to compare, hey, that guy's brokerage is only 6 ringgit because his capital is bigger. So why not I wait until I build a bigger capital to save on that 6 ringgit which I'm going to get it. So you see that mindset. So don't be so penny wise, pound foolish when it comes to investment. Right? So what if you spend, if your cost is 6 ringgit higher than the next fella? But if you can not even double, even make 50%, that's 100 over ringgit. Right? So you pay 6 ringgit more and you earn 100 over ringgit. I mean, it's perfectly fine. Right? So don't be so. Sometimes we focus more on the small things, right? That actually prevent us from actually doing something about it.
Yeah. So like savings versus investment. Okay. Should you save? We are mostly invested most of the time.
I mean, you kind of have to save your first dollar to start investing. Okay, that's precise point. But I think apart from, because your investments are meant to be there, especially stock market, stuff that you don't need emergency, right? So I wouldn't suggest anyone puts emergency money into stock market. I mean, if you really need it, like that's all you have and savings and you put 100% in it, typically from personal experience, what happens is when you need it the most, that's when the market is at the lowest.
Market always crash when you need the money.
Yeah, only when you need the money, right?
For sure.
So if it's kind of emergency money, keep it out, put it somewhere else. Yeah, earn that 1-2% FD. That's fine. Investment has to be long term. I mean, it has to be very business like. It has to be, business not going to double in a day, right? So you kind of have to have that long-term view. It's like a plant. It needs time to grow. You cannot rush a plant by giving more water, right?
No, you pull it up.
Pull it out, right? You can't, right?
Stretch it.
So it takes time. And I think now it's after this whole MCO and liquidity has come down, and of course retail liquidity has dropped as well. I think we are now kind of back to not the new normal, but the old normal of what investing should be like. Where you should take a long-term view. It's very much based on fundamentals, right? And cash flow and things like that are also very important, right? I think that those triple, double up 6 times, 10 times in 3 weeks, 4 weeks, maybe a while since we see it again.
Yeah, I think that's one of the beauty in stock investing as well, because it's one of the most liquid investment asset class, right? Comparing like even let's say properties, because everybody either properties investment or stock investment is the biggest investment. FDs and all that is basically savings only, right? So like even if let's say we are most of our money is invested and we do really need it, right? And you can actually just liquidate it quite easily in the market. Although we may suffer some loss, right? But if you really need it, but we invest in asset class like let's say a property. I mean, if you need the cash now, when do you think you'll get?
My usual advice to investors is that if you need the money within the next 3 years, or you know that you need this money either for your child's education or for your college education, don't touch it. Keep it FD. Because you never know what's going to happen in the next 3 years. Only those money you're sure you're not going to need it for the next 3 years, right? Invest those money.
See, you already learned something today. 3 years.
By the way, just a quick shout out. Today was supposed to be Singapore Tuesday, right? So next week we'll be back with Singapore Tuesday. I'll be back with Singapore Tuesday. But in the meantime, if you guys want to check out sgxacademy.com, they do have some free webinars there as well. SGX also has a Telegram group as well. You can just search for SGX Invest, and you can kind of join their group and you get kind of updates as well. Also, this coming weekend, I think I'll be seeing some of you guys. For those of you guys who signed up for the masterclass program, I know we are on a CMCO lockdown. I'm going to be doing this live with you, right? Obviously from our office, but you're going to be dialing in through Zoom instead, right? So for those of you who previously attended and you want a refresher, send us a text message, just put Portfolio Mastery or PM in the comment section below and get in touch with us. This weekend, Saturday and Sunday, we start at 9 o'clock. So, we can't go anywhere anyway. So we are on CMCO. So I will be seeing you guys this Saturday for our Portfolio Strategy Masterclass. All right, it's a 2-day session.
Before you forgot, Alvin, you're actually going to see some of them on Thursday also.
Oh, yes.
Because Thursday, actually this week, we are starting our Bursa Malaysia I, which is basically Sharia compliant stock investment over the next 2 months. All right, so on a weekly basis, on Thursday, 9 p.m., alternately, Alvin and I will be mentoring for 1 hour. So basically, it's going to be on ET Online Campus. All right, so if you want to attend the program, you just go to ET Online Campus group on our Facebook page and just request for access. Okay, we'll allow you the access over the next 2 months so that you are able to go through about 18 videos, isn't it? 18 videos on learning to invest and also how to look at price chart analysis. And then we have that weekly mentorship program, right? Weekly mentor where Alvin and I will alternately come every single week over the next 2 months. So the first one is going to be this Thursday, and Alvin is going to be there at 9 p.m.
9 p.m.
Okay, so just go to ET Online Campus and just request for access. Okay, and Alvin, you also mentioned on the SGX, we have Tuesdays on SGX, right? We have actually created a group also, right? ET Online Campus SGX.
ET Online Campus SGX. It's a free group. Just click and join, right? It's on Facebook. For those of you who are tuning in from YouTube, anything stock related to SGX or whatever we've been covering over the last 6 weeks, join us. You get the latest update. We just want to start a sort of a discussion group going there. If you missed some of our previous videos, do check us out. It's on Tuesday. So next Tuesday, we'll be back with another Singapore Tuesday.
So guys, we actually have a lot in store for you. In fact, there are a few more things coming up for you guys, right? And because we know people in the industry, and many of them actually wanted to work with us, and hopefully this will be able to benefit you guys as well. All right, we want to impart that benefit to you guys so that you are able to become a more well-rounded, well-informed investor. So it's already 9:34 p.m. guys. I think we have reshared whatever that we want to share, but I think before we end today, maybe you want to give some advice because the topic today is basically how to prepare yourself in the next lockdown. Okay, so if you are a newbie or a person who probably invested before but still cannot make it yet, right? What would your advice be?
For me, it's constant education. You gotta always stay updated, right? If you don't like reading, unfortunately, I got bad news for you. It involves a lot of reading, right? So reading should be something enjoyable. It should be a habit. So read a lot. But I say read, I don't mean kind of watch TikTok videos or I
still don't understand why people look at TikTok anyways.
Or your newsfeed. Your newsfeed is not considered reading. Okay, read something credible, right? Constantly educate yourself. Of course, if you don't have already an open account, please open an account. Do it early, right? It's 10 ringgit to open an account, right? For you to enable to experience it, right? I think that the third thing you should have is you need to have a little bit of patience, right? When you're starting your first portfolio, right? So whether we're now CMCO or eventually MCO or RMCO again, you should be prepared, right? I think look longer term. Don't look at the 600 cases that we saw today. I think at some point humanity will overcome this, like we always have. It's been during all this doom and gloom that you're actually getting some pretty good opportunities, right? Don't waste it. Yeah.
Okay, Peter, anything to say?
Back to the other point I raised earlier, right? I think now we're really starting to move into the reality period where all those easy money is no longer a reality now going forward. So definitely, you still can actually make decent gain from stock market. I'm not saying that you can't make any more gains, right? But the effort needed now to actually make that gains is more real, right? Really need to put in effort to actually get that gain. For those who have gotten stuck in certain stocks, right? Just the advice what you should be doing. The first thing is spend time to look at the fundamentals of the stock that you have bought, that you have caught, and be very objective about it. If these stocks that the fundamental is still good and the price is just temporarily down because of market reaction, then be objective about it, keep it. But if you really come to terms, right, that these stocks actually there's no fundamental to it, and then the only reason why the price was flying so high in the last few months is simply purely due to a rush of liquidity, then you really need to be objective about it and reassess the situation. If you really need to restructure your portfolio to change it into other portfolios or other stocks which actually have better potential. So you have to be very objective about your portfolio going forward. Yeah, I think that's the advice I would like to give. Do not expect this time the MCO to really have the rally effect like what we've seen in the last 6 months simply because the moratorium has ended.
Yeah.
Now it's really the reality period.
Yeah. Yeah, so it's always easier, I think, for initially to be news-driven, right? Because everybody will just come in. But I think now we have to be back to reality again. And we look at this, we are basically not really fully worried whether it's MCO, whether it's 6,000 case, whether it's 10,000 case, because we are prepared. And I hope that you are prepared as well, right? And so my advice is basically, if one of the easiest platforms to go through and to get in touch with data or data-driven, right, and not just news-driven, is to actually subscribe to our Genius package, right? Like I mentioned to you, the Genius package is not just the tool, right? It's a whole lot of things. Yeah. So hopefully that you are able to stay with us as well, and hopefully that we're able to guide you from time to time as well, right? So and the Genius package is not going to cost you an arm and a leg anyways, right? It's only 200 ringgit and 40 a month.
It's less than a coffee a day.
It's less than a Starbucks a day. Much cheaper than Starbucks. Half price Starbucks every day. So it's only 240 ringgit. Of course, you subscribe for a yearly basis. It's gonna be you're gonna get more discounts, right? It's only 2,400 ringgit a year, which is 200 ringgit a month. So it's not that expensive, right? And with that, you are able to access the tools. And you know what? Whenever you come to Kopi Time, even let's say you're not decided to attend our training programs, you come to our Kopi Time, at least you know what we are saying. And then you can always go back to the tools and verify whatever we say.
Yeah.
Don't trust whatever that we say, right? You can always verify once you have the tool, right? So same thing like you ask any guru, like the guy can talk until the cow comes home, but if you can't verify whatever he's saying, is basically useless, right?
Yeah.
Fake news.
Fake news, yeah.
So please do. I think the first step, if you are a beginner, I know some of you may think that 200 ringgit a month is expensive, but let me tell you, it is still much cheaper. Like Alvin said, coffee. It is still much cheaper than you going in the market blindly.
Yeah.
Right. So do join us, and of course, if you are also interested in our traders program, join us on the 24th to 25th. Okay, and just type TCP on the comment section so that our colleagues will get in touch with you and share with you what is going to be taught in that traders program.
Yeah.
Right. So education first, I think, for me, and then go into the market and learn. Right. Yep. So I think that's all I have to share. Guys.
Yep.
Okay.
Thanks for tuning in, everybody.
Yeah. Thank you so much, and we wish you all the best. And I hope that you are prepared, even this lockdown or for the next lockdown or for any period of time. As long as you are prepared, I think we can be cool. Okay. So see you again in the next session. And tomorrow, I think we have a Mandarin session going on. And Thursday, we're going to have a Future Proof Thursday.
Thursday,
And we're going to bring one of the licensed crypto exchange in Malaysia to join us on this Thursday as well. So do join us. Please do like our Facebook page and follow us and subscribe to our YouTube channel so that you get notifications from us. All right?
Yeah.
So with that, thank you so much once again for joining us. All the best to you guys and have a good night.
Thanks, guys. Bye-bye.
You have to poke.